Alrighty, what's up guys? Sunday, October 16th, so we'll do what we do here and jump into the notes for the week of October 17th. My birthday. 30 years old tomorrow. All washed up. But I'm going to jump on the mic here with the Mastery members in about 30 minutes. So we'll kind of fly through this here, guys, and frankly, it's all kind of the same. So the theme of the week is nothing has changed. So I look forward to the day where we can talk about pretty setups and buy signals and, something other than the volatility index, the dollar, and the S&Ps. But frankly, guys, it's kind of all that matters for now. Until something changes. And you got a pretty good pop there last week and a pretty good puke on Friday. Therefore, nada has changed. So the notes for the week. We'll cover our pieces of the puzzle. We'll take a look at the S&Ps, the Qs, the IWM. We'll do a quick breeze through the sectors. Spoiler alert, they all kind of look like shit. Then I'll cover my game plan and our open positions for the week ahead. Then a couple of lessons from last week. Not to promote my own indicator, but the lesson is basically, you gotta wait for your pretty colors. Like if you don't get buy signals, shouldn't be getting long. So we'll jump in, shall we? So as far as the pieces of the puzzle, the volatility index is still above the daily 21 EMA with buy signals. So as long as that's the case, guys, in my opinion, she's fixing to make a big move here. And at this point, a bigger move in the volatility index would just spank the market a little bit lower. So the structure of the VIX is still bullish. No changes there. Moving on to HYG, the junky-ass bonds. Cute pop last week. Nothing changes under the daily 21 with our sell signals on the daily 4-hour and the 2-hour. So as long as that's the case, HYG is bearish, and a bearish HYG, not good for your market. And then, of course, you've got the dollar. And the dollar still remains super bullish. And to boot, we got a brand new daily squeeze. So the dollar's bullish. That didn't change. The VIX is bullish. That, of course, didn't change. And HYG still looks pretty rough. So as far as the pieces of the puzzle, no changes last week, guys. So, day trade the pops, take them to lunch. You wine them, you dine them. Don't take them to bed. VIX and dollar above the 21, HYG under the 21. You take some calls to bed, you might not like what you wake up to. Alright, moving on to the indices. And we can breeze through this as well. S&P 500. This is all textbook downtrend. Big flush, trap the shorts, squeeze them, right back towards your falling 21 EMA. If we can't clear that level, you look for the rejection, especially if you got the S&Ps rocking a sell signal. So no different last week. You pop towards your 21, we got stuffed. We got daily 4-hour, 2-hour sell signals. It's all kind of the ebbs and flows of a bearish market. So what I like to do is look at the market on the inverse chart. So if you put the minus sign in front of any ticker, it'll flip it upside down. So on the inverse chart of the S&Ps, it's all pretty textbook uptrend. You get back above the 2 moving averages, 21 EMA and the 50 SMA. You get the positive cross, and you're pulling back towards your rising 21. So you're making higher highs and higher lows. Higher highs and higher lows. It's behaving like an uptrend. So reality is, guys, it's behaving like a downtrend. That's why the last few videos, I say last few videos, really like the last 2 months or so, we're talking about the same shit every weekend. The volatility index, the dollar, HYG, these things matter right now because even though it's the typical ebbs and flows of a downtrend, so it's all pretty textbook from that perspective, it's a bit violent. It's a little bit spastic. We gap down, then the Qs are up like 3-4%. For sure, it's a little bit nutty, but when you can anchor to structure, especially on bigger time frames, you're not going to get caught with your pants down. Now, you might not be the first guy or girl to get long the market before the reversal, but if anything, by the time you're getting long, you've got some confirmation to work with. And that's kind of the theme of this market. They pop it for a little bit, but you never really get that confirmation that the trend is going to last. which we're going to talk about here in a second. But yeah, S&P is under the 21 with a shell signal. QQQ. Of course, no changes here. And you got sell signals from a daily down to the 1 hour. And then, out of respect, we'll take a look here at the IWM. It's all the same stuff, guys. There's not too much like context. It's all the same. So we'll breeze through the sectors here. XLK looks like XLV. XLV looks like the semiconductors. The semiconductors, whoops. Alright, the semis look like the financials. Financials look like the industrials. They look like the utilities. The Utes look like consumer discretionary. Consumer discretionary looks like XLB, which looks like XLP. The only thing that looks different is the energy sector, which we're going to come back to. But all in all here, guys, the VIX is still bullish. The dollar is still bullish. HYG is still bearish. And the sectors all look like crap. So, I don't know what to tell you. Like, I'm waiting until something changes. And we get like these glimpses of hope. It's like, oh my god, they got the S&Ps into a 5-minute uptrend. Like, here comes a big reversal. And then we just kind of fizzle out and crap the bed the next day. So, not too much as far as variety of content with the last few months of videos here. But if anything, hopefully it's keeping you on the right side of the market. Alright, so pieces of the puzzle, nothing changes. The S&Ps, the Qs, the small caps, nothing changes. The sectors, nothing changes. Therefore, the game plan does not change either. We're looking to short the bounces until these things start to change. And the key is, guys, you're anchoring to things that can't change in one pop. Like, for me to change my opinion and want to get bullish, a lot of things have to shift. Like, I'm really going to wait for that confirmation versus, oh my god, we're up 2%. Let me get punked out of my short positions and buy a bunch of calls. And really in terms of like, hey, okay, things are starting to shift. Maybe I don't want to short every rally anymore. I can't really have that opinion until we cancel out the biggest problem that I see, which are these monthly squeezes that are about to fire short. And for what it's worth, for your notebook, the QQQ is actually firing a squeeze short on the monthly time frame. So the bulls have got to do everything they can to keep the S&Ps above the monthly 50 and the QQQ. Like the combination of daily downtrend, weekly squeezes already firing short, and then you got a monthly squeeze breaking your key moving average. We could get pimp smacked much, much lower. Much, much lower. So they got to cancel out the probabilities of these monthly squeezes firing short before I can look at the market and say, we might be out of the woods. So what does that require? Like on the S&Ps, we're talking, like we got to take out the previous highs. Like 4,300 plus. So bigger picture, guys, I still think all signs point towards more downside. And I've given you my bigger picture target, which is 3K on the S&Ps. So, of course, along the way, there's going to be pops. And we've seen this, right? Flush, pop, flush, pop, flush, pop. Again, it's the ebbs and flows. Take those pops, take those short squeezes as opportunities to get short. All right, so as far as our open positions, we're still short Apple. We got November expiration 150. There we go. November expiration 150 call credit spreads. We're short Walmart. Looking for that daily squeeze here to roll over and fire short. So we got some call credit spreads there. And as far as the upside, guys, energy is kind of the only potential bright spot for now. So we got some put credit spreads on LNG. And these expired this Friday. We got our short puts at 165. So I wouldn't bank on energy being I wouldn't bank on it being like the safest bet going. Because the reality is, if the S&Ps go down 5% next week, probably put some pressure on the energy sector. So make sure you focus on structure. The LNG above that daily 21 EMA. I think you gotta like the odds of that daily squeeze firing long. So that's a pretty good looking one. There's names like EOG. You've got ExxonMobil. Come on, ExxonMobil. Man, what's up with ThinkorSwim here? There we go. ExxonMobil's pretty solid. So yeah, I think as long as XLE can hold above that daily 21 EMA, might be worth a shot. Otherwise, we're shorting the rallies until proven wrong. So that basically covers it, guys, for the notes. The game plan, the puzzles, the sectors, the S&Ps, the open positions. So here's what we're going to wrap it up on for today. A few lessons from last week. The biggest one being trusting the indicators. And what I mean by that is if we're going to get some lasting reversal, meaning a reversal that lasts for more than like 24 to 48 hours. A good example would be something like August. So are we all in agreement that was the last time the market actually gave you a sustainable rally? It was back there in August. Otherwise, the pop back here failed. Right? The little pop from 2 weeks ago failed. And then, of course, the pop from this week failed. So hopefully we're all in agreement. Last time we had a sustainable rally was back there in late July, early August. So again, not to promote my own indicator, but what I'm trying to really promote is have a rule set, like have your list of criteria, and really stick to your guns. So on the indicator here, a couple of things I want to take a look at with you guys. In terms of buy signals, what registered back here? Now, it's a pretty good push, right? Your S&Ps go 3,900 to 43, just about. So throughout the course of a $400 rally, what do we get as far as buy signals on the Big 3 indicator? So on the 2-hour chart, we had 2-hour buy signals for the last 120 points of that rally. So at the tail end of that rally, things were strong enough to print a 2-hour buy signal. All right, what about the hourly? And as you guys can see, we had hourly buy signals throughout a good portion of that rally. So it printed 2-hour, it printed 1 hour. Quick peek here at the 30. And of course, throughout that push, you had some 30-minute buy signals. Now, what's interesting is the 30-minute buy signals, they start printing a few days before, you would look at that daily chart and say, okay, it's game time. So we'll paint that white. And here's what I mean. At that point, from the 27th on, we started getting 1-hour and 2-hour buy signals. The 30-minute buy signals, they started popping up a few days beforehand. Okay, what about the 15-minute time frame? And on the 15-minute time frame, let's go find that date. We started getting 15-minute buy signals a few days before we got 30-minute buy signals. So the point being, guys, before some big-ass, call it a short squeeze, call it a reversal, before a lasting rally and a downtrend unfolds, we start to print buy signals on our lower time frames. First the 5-minute goes bullish, then the 15, then the 30, then the 1 hour, then you take it from there. So the point being, if we're going to see something similar in this market, my expectation is the indicator is going to work the same. If we're going to get some big rally back towards the 50, back towards the previous highs, at some point here, my indicator should start to print 5-minute, 15-minute, 30-minute, 1 hour buy signals. So where that's powerful is in the absence of those buy signals. If the 5, the 15, the 30-minute, if they can't go from neutral to bullish, yellow to green, the probabilities would suggest we're not going to see a rally like that. So take a look. The pop that we had last week, and it was a huge rally, right? 3490 to 3700. That's a really big rip, especially in a 2-day window. But check this out. At any point during that push, did the indicator print buy signals on the 2-hour time frame? Obviously not. Okay, what about the 1 hour time frame? Never mind buy signals, we didn't even get a positive moving average cross. It wasn't even strong enough to take the 21 back above the 50. So no buy signals on the 1 hour. What about the 30? Now the 30 got the positive cross, but you never got your buy signals. So technically the 30-minute chart never got into a really bullish uptrend. That's what our buy signals are looking for. Okay, 15-minute. Did we at least get a 15-minute buy signal? We never got a 15-minute buy signal. So take that into consideration. 200-point rally in a borderline vertical fashion can't even take our 15-minute chart bullish based on my criteria. Did we at least get a 5-minute buy signal? We had 5-minute buy signals for a grand total of... Chill out, ThinkorSwim. 5-minute buy signals for a grand total of 15 minutes. So in plain English, guys, what that tells me is I can't trust these rallies to the upside. In terms of like, hey guys, let's buy a bunch of calls here if we can't even get 5-minute buy signals. Because when I study these previous rallies, the rallies that actually had legs to them, they print buy signals across a lot of lower time frames. That's what triggers that reversal. Your weekly, your daily charts, your larger time frames are in a downtrend, but all of a sudden your 5-minute, your 15, your 30, your 1 hour, they go into an uptrend. You start getting the pretty colors, right? The green beans. The absence of the green beans tells me, regardless of how spastic and vicious these short squeeze rallies are, they never transition from bearish to bullish. It's an oversold bounce. It's a dead cat bounce until we actually start to get some buy signals. So one more quick example. You had another big rally here a couple of weeks ago. We go 3580 to 3800. Let's take a look, because that failed in a huge fashion. So how about the 4-hour chart? Of course, never any buy signals. And mind you guys, we've had daily sell signals all along the way. That's your first indication these pops are going to fail. They're not going to last. But regardless, nothing on the 4. Nothing on the 2. Nothing on the 1 hour. Even though we got the positive cross, never went full bull. 30-minute. Oh, that's a couple months ago. 30-minute chart, you had nothing. Okay, 15. Surely you had buy signals on a 15-minute chart, right? We did. For an hour. And then they quickly failed. Alright, how about the 5? Like, did we at least get 5-minute buy signals that lasted? Well, come on, ThinkorSwim. Yeah, we started getting some 5-minute buy signals. But notice, guys, they only do so much for you. Why is that? A couple of reasons. One, you got pressure from the top down. Weekly squeezes firing short. You got a daily downtrend. We never make that full transition. So, when there's pressure on the market, the only way you're going to reverse is if you can fix those problems from the ground up. If you can't even print the 5-minute, 15-minute buy signal on the big 3, you're not fixing those problems. That tells you short these rallies until things begin to change. So there you have it, guys. I got to jump on the mic here with the members of the Mastery Group. But I hope you found this helpful. And again, one day we'll be able to get here together and talk about pretty setups and all those kinds of beautiful things. But for now, everything's bearish. Everything points towards more downside. We're not going to marry that idea, but we are going to anchor to the things that matter. So enjoy the rest of your weekend, guys. Go on ahead, hit the subscribe button. And as always, you can check out the link for the Mastery in the description. Talk to you guys soon. Have a good Sunday.